I think we all know what's been happening to the price of WTI crude oil, and we're probably starting to feel it a bit when we go to fill up our cars at the petrol stations, pumps. Now, I even heard mentioned this morning a price target of between $200 and $300 a barrel, which is pretty shocking really, but these aren't normal times. So I'm going to have a look at the technical analysis, the charts, the underlying fundamentals and sentiment to see where that price could be heading next, potential upsides and downsides, and hopefully you can build that into your trading and investing. So with that, let's get on with the analysis. So on the sentiment technical analysis, typically this time of year it's bullish and then heading sort of at the end of this month to become a bit more flat through to sort of early summertime. The commitment of traders above that all doing as expected in this situation. You can see the price up there at the top. The black line is the large speculators. They're starting to follow that move as expected, and the commercials doing the inverse. So all looking still very bullish there, but really these are unusual times, so take what you want from those underlyings, because it can only take a bit of fundamental shift at the moment to change the balance. So the Baker Hughes rig count numbers can give you an excellent feel for the overall sentiment of the energy oil production market, and at the moment US numbers, that's the line I'm focusing on, changed from prior count 0, so unchanged, and from last year up 247, so still holding bullish at the moment. For those that follow the inventory numbers, then last week's were better than forecast at minus 2.597 million barrels, and for this Wednesday's numbers they're forecast to be down minus 0.833 million barrels. So it's a very steep one-way street at the moment, up 30 odd % since the beginning of the Ukraine conflict, and you can see actually if you roll it back to when we were looking at negative numbers in sort of early 2020, we're up a staggering 619%. And really it's, like I say, one-way traffic, but it does have a long way to fall back, and you can see that pink line there, that strong support maybe for the price if it does crash back, where we might see resistance into that yellow box area. That's $75 to $63. That's a significant pullback, and as this is the weekly line chart, longer term view, I thought I'd just pull it out to see, using the Fibonacci's potential upsides, and next one's about $134. Then you're probably looking, like I say, around the 150s, which we've been talking up for a while now, and then 170, 190, and then into that $200 mark. So if you're thinking this bull run has done enough and you're looking for potential reversal entry points, then here's the 4-line break chart for you, using a 2-bar aggressive entry and a 4-bar more conservative. Those numbers are $115.25 and $103.50. So the daily Heikin-Ashi down the bottom there are two signals, unsurprisingly bullish. Volatility really has picked up from a normal range 25-30% per year up into the 60s. So running at highs at the moment. Volume also picking up, nothing especially out of the normal there, but definitely trading and pushing its longer term moving average. Heading on to the price, you can see we're well out of those two standard deviation regression trend band there, the light blue, light pink shaded areas, so potential long way back for that fall like we mentioned earlier. And we can see the support areas, that green line which was so key a few months back, around $60, and that breakout purple triangle area where the price pushed on solidly from. But we can see that buy signal at the moment also on the 2 pink line box breakout there, but all in all very bullish at the moment. So for the Renko chart, I've actually changed the block size from 50 cents to $1 to incorporate the increase in volatility that we saw on the daily Heikin-Ashi chart. Now in terms of the indicators, those three at the bottom there, all very bullish. Same story with the price, everything trending up nicely from actually December time, even before this real push in the price since the Ukraine conflict started. And if the troubles continue, potentially Putin puts the slammers on the gas coming into Europe, then we would expect a spike in the price and short-term upsides round the mid 150s to mid $160, and then if it is a real strong move, then up to about $190. And downside, if it fails here in terms of Fibonacci numbers, 61.8% at 104, 38.2 at 89, and then back to where actually the trend started before all the troubles in December, which is around about $70. But at the moment, a very bullish looking chart. So in terms of pure technical analysis, the score this week, not very difficult. It's bullish overall. Heikin-Ashi Renko completely bullish, and the other factors, seasonality, COT, rig count as well, bullish. Line break chart there. If you think the price has done enough, it's going to reverse with some numbers there for you to consider. In terms of targets, some pretty hefty moves still possible here to the upside, 4.25 and 8.25 to 1, and the downside 1.5 and 2.13 to 1. But overall, a bullish technical score. So use the technical analysis as potential targets, and to help you, especially in these volatile times, the risk management, trade management of any position you might have on. But really, it's all down to the fundamentals and what goes on in Ukraine, and whether Putin turns off the gas to Europe, or whether this horrible conflict can be settled and sorted out as soon as possible. So you're going to have to act fast, be on your toes, be nimble when trading crude oil, because as we saw, volatility has doubled in the last few weeks. It's certainly a tricky market to trade, and you don't want to be caught out, so be careful there. So let me know in the comments below what you think of the price of oil, where it's going next. Let's get the discussion going. And if you want to talk in more detail, then we've got a free traders club on Discord that's open to absolutely anybody, and anyone can join in, and we discuss all things trading. Lots of exciting topics to follow up on in there. I'll put a link in the description below for you if you want to join there. But all that is left for me to say is, be careful with the trading in these very nasty, horrible times. And thanks for watching, and I'll see you in the next video.